10 days, 4 cities, a roadshow like never before. Just when FII interest in India was beginning to wane, Finance Minister Arun Jaitley is out there in the US, hard selling the India story.
Indeed he is, but are foreign investors buying his stock? We discussed that with 15 experts across 8 locations and 3 continents. A little later on the show, we also get you the man of the moment. Right here on the India pitch, joining us all the way from the United States will be Finance Minister Arun Jaitley himself.
Here are the 15 voices that matter who will be joining us on the India pitch this evening over the next 3 hours right here on ET Now. Parag Saxena of Newsil Crew joins in straight from Times Square in New York. Teresa Barger of Kardika Investment joins in from Washington DC. Seth Freeman of EM Capital Management joins in from San Francisco. Punita Sinha of Pacific Paradigm Advisors joins us from New Delhi. Rahul Chadda of Mirae Asset from Hong Kong. Rashesh Shah of Edelweiss from Washington DC to talk about the market and FII view on India.
But we've got plenty of corporates and some of them actually travelling with Finance Minister Jaitley, and they have a first-hand view of how is US really buying his stock. So we've got Rajan Mittal of Bharti Enterprises in Washington. We've also got Naina Lal Kidwai, who's going to be joining us from Washington as well. We've got Mukesh Aghi of USIBC. Let's get you a view from what the US corporates are really thinking of at this stage. And he joins us from Washington. Windy Banga of Clayton Dublier and Rice from London. Kiran Majumdar Shaw was in the United States. She's been speaking to a whole host of investors, and she joins us with a perspective of whatever she's gathered so far. She joins us from Bengaluru
as well. And of course, we've got the macro view coming in from Meghnad Desai and Arnab Das joining us straight from London. That's the big picture macro view. Sadanand Dhume of the American Enterprise Institute had a long chat with the finance minister. He joins us straight from Washington. Geeta Gopinath, one of India's most popular economists from the Harvard University, joins us straight from Boston over the next 3 hours on the India pitch.
Finance Minister Arun Jaitley began his 10-day visit to the US with the first leg of his high-profile trip taking off in New York, where he rang the closing bell at the New York Stock Exchange, which is really the world's finance capital. He then met and hard sold the India story to key foreign investors and CEOs of Fortune 500 companies. He also met with his counterpart, the US Treasury Secretary Jacob Lew, in New York before heading to the capital city of Washington, D.C.
The thrust of Jaitley's visit has been to reach out to finance institutions, Ivy League campuses like Columbia, and influential think tanks. Jaitley, of course, then heads to Frisco next for a roundtable with FIIs, and will also be speaking at the Stanford University before driving up to the nursery of the global tech titans Palo Alto to meet and understand the challenges that startups face in their journey.
It's a packed itinerary indeed, but India is a bright spot in a troubled market, and the government is doing all it can to lay out a red carpet for foreign investors. That's the word that came out from Finance Minister Jaitley. He also asserts that India's attitude towards foreign investment is now far more welcoming than it has been in the past, and the thrust on reforms will only make India a more attractive investment destination.
That's right. So, Prabha, Jaitley doesn't see the need for any big bang reforms just yet. He's instead a believer, it seems, in incremental creativity, as his chief economic advisor puts it. Do the basics to boost higher economic growth. That's the mantra I shared with Sadanand Dhume of the American Enterprise Institute in a chat in Washington just yesterday.
Foreign direct investment, which in the 90s and the early part of the last century, the last decade, we found there was some resistance, I think has been accepted as a very important additionality of resource in India. And therefore, the resistance against them, even by left groups, is very marginal. And by trade unions is, I think, is just symbolic. And therefore, it's an important acceptability of this change scenario which has taken place. We must now try to ease in the processes of doing business in India. So I would certainly say at this stage, when I look back the last 12 months, easing the processes, both at the center and the states. The states have also joined in because all states are now competing for that resource. And therefore, they are in the process. I don't think we've gone all hog, but that's work in progress as far as that agenda is concerned. I think the taxation structures, some were obsolete and some were bringing India a bad name. So we had to take a very bold decision of saying the slab of corporate tax in India will now go down to 25%. And the object was that we must give to the general body of both domestic and international investors a competitive taxation rate, because in our neighborhood, that's what the average taxation rates are. And therefore, if I am going to tax people 10 to 15% more than that, then obviously India loses its attraction as an investment destination. So we are now in the process from the coming days onwards. Every year for the next four years, we'll be gradually bringing down the direct taxation rates in India. But one of the major reforms we are now undertaken is the indirect taxation. Every state has its own indirect taxes. They have a large number of them. And therefore, transportation of goods or services from one state to another is a problem. Building consensus between these states is highly challenging. And therefore, through the goods and services tax, I broadly succeeded in building a consensus. And I think the most important aspect of the goods and services tax is that 1/6 of the world's population will be one market. Therefore, for any investor in India, both domestic and international, he has a market at hand. When I presented it in the Lok Sabha for approval, the Congress party decided to abstain. For some reason, though they had supported this idea of this bill in the at the earlier stages, they had introduced it. So their abstinence was for political reasons. But every other political party, including their allies, supported this legislation. There were a huge number of decisions which have been pending. I won't go into all of them. And just the pendency itself had conveyed an image of indecisiveness. We could easily take the decision to fix up gas prices linked to the actual costs. We were able to hugely cut down in our very first year something which was otherwise regarded as very sacrosanct and populist, the subsidies. Petrol is today linked to the market price. The declining prices have helped us. Diesel is linked to that. We've been able to implement some of the very radical programs about which we had doubts earlier on basis of the DBT. And therefore, the more and more subsidies we've experimented are now going directly by way of cash transfer to the people. So the state support itself and the leakages are getting out of that. Now, all this have created resulted in a much lesser pressure on the revenue itself.
We started off with the idea of Thatcher and Reagan. Actually, Thatcher did very little in her first term. Wanted to get re-elected and then went for the big bang. Is there a policy within the BJP that in this term you are going to do things in slow incremental terms, and if you get re-elected, then you go for a big bang next time? I mean, it would be a defensible policy. I don't know that you actually thought it out. The way things are working out, it seems to me perhaps you're going that direction.
Swami, I've been following every word you write. And I am still trying to discover the meaning of Big Bang.
Shall I tell you?
I'll be educated on this.
Okay. Privatized worst 10 banks. Say that you abolish the railway board and have railway corporations within the next 5 years. With Deborah Committee. Have a program for police judicial reform where crooks are put in jail within 2 years. Just 3 things. Big bangs. All 3.
You see, when you let me take your third point and the first point. Crooks being put in jail for the right reason. In fact, when I say that people with assets abroad must pay tax, and if they don't do it, then penal action will follow, your colleagues in your paper say this is a draconian law. Therefore, I'm aware of the inherent limitations of these kind of suggestions. I'm open to the suggestion of consolidation of some of the banks which are not performing, because that suggestion has been coming. But I still do feel that in promoting a large number of these projects, now stalled projects, it's eventually to these banks that we've been going and asking them to help us to rebuild the stalled projects. are you aware of the fact that out of the 15.5 crore bank accounts as a financial inclusion, private sector banks had a contribution of 23 lakhs. And therefore, there is a lot of distance in these areas funding highway programs. I can still depend on the state bank to do it when the program is stalled. Not that the private sector is not doing it, the banks are performing extremely well. And therefore, we've reached a happy situation. I'd like to see more private sector banks doing well, more internet banking, more foreign banks investing into India. But at the same time, I am not willing to get blocked in one controversy and say, because one reform has, therefore that becomes symbolic that the government is helpless. I'd rather do those 300 things which are reasonably possible. And I think for the next 1 or 2 years, we have our agenda quite full.
A little later on the show, of course, the Finance Minister will be joining us live and exclusive on the India pitch right here on ET Now. But let's take stock of what's really going on. The important question that arises is, why is there a need to hard sell India? Why now? What about the timing of this whole move? What does the government really aim to achieve with this 10-day trip of the Finance Minister to the United States? Who better than Tanveer Gill to answer that? Tanveer, you've been speaking to top foreign investors. What do you think? What do they think Mr. Jaitley is really reaching out here?
Well, Sandeep and Supriya, the Finance Minister's trip this time to the US is all about perception management and improving communication post the MAT controversy. If you take a look at the hard numbers on the ground between September 2013 to March 2015, the Nifty has returned 70% to investors. Compare that to the 10% correction we've seen over the last 3 months, and it's not all that bad. Even in terms of the rupee, right? Over the last 15 months, rupees appreciated 9% from the record lows of 70, but in the last 3 months, it's just moved around in that range of 1 to 2%, being extremely resilient to other emerging market currencies that have been volatile, and that's an important variable because it offers protection and hedge for foreign investments in India. Flows have been strong, $54 billion coming in equities and debt over the last 15 months, and just $2.5 billion being withdrawn from the Indian market from both those asset classes over the last 2 months. That's May and June included. So then the question comes in next. Does the Finance Minister really need to hard sell India in the US? And the answer is yes. Investors have turned cautious on India. There has been a shift in sentiment. India needs a ratings upgrade. Just an outlook upgrade is not enough. India needs to draw in capital from long-term investors in the debt market. Also, India needs to change its perception, be seen as a global market, an important global market and not just an important emerging market. And the fact that you need to draw in more money from global funds and not just emerging market funds. The last point there being infrastructure investments, and India needs to convince foreign stakeholders that investing in Indian infrastructure is a viable option for now.
And that investment is required to bridge that gaping deficit. But from the looks of it, there is still a lot that needs to be done by the Modi government. What is it that the FM should do? What should be his must-do list at this stage?
Indeed, Sandeep and Supriya, a lot of work still needs to be done. The Finance Minister needs to show commitment to push reforms like GST and land bill, win the opposition vote on that, assure investors of consistent tax policy, address fears around the MAT controversy. Many investors thought that was an unnecessary hurdle. Explain the roadmap for an 8% plus growth in an environment where global growth is struggling. Add to that a bankruptcy code as well as ease of doing business. Those are the things that the government needs to push for.
All right, so the message is clear. It's time to analyze the Finance Minister's visit, and we will, of course, begin with his most targeted audience, the foreign investors. Do they continue to believe in the India story, or is the faith a little shaken there?
That's right. We've got 6 special guests joining us to analyze that part. Really, are they buying the India story? Parag Saxena, I'm going to start off with you, CEO of New Silk Route, who joins us from Times Square in New York. You were part of those meetings with the Finance Minister just yesterday and day before yesterday. You were extremely bullish on India a year ago when this government took charge. Has the euphoria now made way for more guarded optimism?
I think the euphoria is still there. It is guarded with some optimism, as you say. But really, the essential fact that the market moved up and has stayed there is still the case. For the market to continue to move up, the stock market to continue to move up, more will have to happen. Unless we see that, you're not going to see the market move to the next level. But certainly to be able to sustain where it is, enough has been promised on the policy side. Action is what is necessary now.
All right, you really have to walk the talk, so to say. But Teresa Bagar of Kartika Investment, who joins us from Washington. Teresa, good to have you on the show. Indian markets actually rose and rallied 70% from January last year to March this year. And then, of course, came that painful correction of 10% from March to now. A lot of people are losing a lot of sleep over that. Do you believe that derails the story?
Well, actually, we rather like that correction because we're buyers in the market. But I think a lot of it had to do with people rotating out of other Asian countries trying to get in on the China rally. So I don't consider that to be a temporal, long-term part of the story.
All right, so that's a blip and perhaps a correction for people to enter the markets. Rahul Chadda, who joins us of Mirae Assets all the way from Hong Kong. Rahul, the finance minister is currently in the US, 10 days of a roadshow, hard selling the India story. Has the story lost some of its sheen, and which is perhaps why it's mandatory for it to be sold?
Not really. I think expectations were fairly high last year, where people thought that the Prime Minister had a magic wand and things could be turned around almost instantaneously. Doesn't work in a democracy, and I think things are going to take their own time. We've seen some slippages on timelines, such as GST, which was expected to be passed in March and hopefully gets passed over the next 6-9 months, but nothing beyond that. And to be fair, again, valuations were slightly expensive early this year, and which is where we're seeing a time correction in market, because market priced in way early between May and December, and what we are going through is a nice period of time correction where, as the economic data improves, we'll see market give due credit for the sectors where performance is shown.
Punita, do you agree with Rahul there? Do you think this is just a case of a time correction, the fact that expectations ran way ahead of reality once this government came to power, and this is just a case of moderation of expectations which has led to this pullback in equities?
Well, I think some of it is because expectations were too high, and some of it is also because corporate earnings have disappointed against expectations. This has been one of the worst quarters in terms of corporate earnings in their history, and so that has also been a little bit of concern. And until we see some signs of corporate earnings pick up, I think that market might remain a little bit volatile. And of course, you also have the global factors, the Fed policy, India's own interest rate policy, and also money flowing into China. So all of those factors have also affected the market.
Sure. Seth Freeman, comment on that. What is your own view? Because, like our guests here are pointing out, it's also a case of expectations that ran way ahead of reality. Don't you think the government is equally to be blamed for having created all the hype, for creating all those expectations? Do you believe foreign investors have a right to feel let down given what's happened on the policy front over the last 12 to 14 months?
I'm very disappointed. Sure, there's always hype. We have a whole new regime. It reminds me, frankly, of when Obama's group took over, and there were huge expectations for change, and change takes some time. But moreover, unfortunately, the Prime Minister can't make all the decisions himself, and it's a big political machine, both in the U.S. and particularly in India, and so I'm not so surprised. On the other hand, as an investor, I am surprised that they haven't been able to get control of tax policy. The issue of GAR has been an overhang for 4 or 5 years now, and now they're talking about MAT, and now I was reading about some other way of defining taxes due in India for foreign investors. And that kind of uncertainty makes many investors nervous.
That's a fair point indeed. I'm going to touch upon MAT, and that's really the huge overhang, and he hasn't really addressed the community at large in just a while from now. So hold your thoughts there. But Rashesh Shah, who joins us all the way from Washington, has been traveling with the finance minister, and he's actually in Frisco with the finance minister today. Rashesh, very quickly, you've been traveling with the finance minister as he's meeting investors and analysts and global think tanks. What's the response he's really getting from all of these people? He's trying to woo the top dollar. Are they buying his stock?
I think it's been a great trip. It's been great to interact with so many investors, both from the FDI investors to the FII investors, and there's a whole range of meetings we have had. And there's a huge amount of enthusiasm around India. I think the change that has happened in the last 1 year in terms of the environment in India, the confidence in India is clearly visible and fairly palpable. There are always a lot of questions around the pace of reforms, the policy issues, the taxation issues, and all those are very standard ones. In fact, you could almost anticipate all those issues. And I think it's been a great opportunity for the finance minister to clarify a lot of these issues. He's been very eloquently, very patiently explained the background, the context, all the nuances that go around in India. And the sense is that there is a lot more increased confidence about India and the prospects in the coming years for a lot of investors from here.
All right, that increased confidence will only turn into reality when the buck begins to flow into India. But Teresa Baga, as an FII, what do you hope to see from the government over the next 12 to 18 months for you to increase investments here in this country?
Well, I think that as foreign investors, we're very concerned about labor rigidity in India. We're very concerned about the difficulty of land acquisition in India. And we are very concerned that the 50 or so states of India don't really act in a coordinated fashion. So the 3 items that are on the docket for land acquisition reform, labor reform, and GST are really good issues to have on the docket. Now, of course, we fear that first of all, the ones that will probably be discussed in August, September at the joint session, the GST and the land acquisition will probably get watered down. Labor reform may be delayed. Those, I think, are the right issues, and we would love to see, of course, a lot more on that. The second thing we'd like to see is the investment cycle pick up.
Fair point. We're going to address some of those specific issues that you brought up, but let's throw it back to Parag Saxena in New York. Last year you did indicate that big ticket FDI will wait for policy action. Has that happened according to you? Why haven't we seen large multinational companies, put in more money in India? Even private equity flows into India from, American large PE firms hasn't quite increased significantly. Why is that?
I think that for big ticket FDI to come in, there are 2 parts to it. One is multinationals, the other is private equity. I think few people appreciate the role that private equity has. It's actually remarkably similar, but I think more valuable than multinationals. And the reason I think it's more valuable is that for an overseas private equity investor to come in, what has to happen? What has to happen is that they have to be convinced that this is a relatively attractive opportunity for them. They can usually make that decision much faster than a multinational can. They move quicker. They too establish factories or businesses with large employment numbers as multinationals do, but I think they can come in faster than multinationals, and so for the country, that's the group to really woo. In multinationals, they will come in, they will take time. I think they will wait to see whether action follows policy. Investors are usually the first to move, first in the listed markets, because if it doesn't work out, you can sell your listed holdings. So FIIs are the first to move. Following that will be FDI that comes in from private equity. But the point I want to emphasize is it is just as important and is quicker than multinationals coming in. Multinationals will be the third step. They will not wait just for policy, but they will actually wait for action. The best solution to action, by the way, is to see people make a lot of money. Whether it is a multinational that has a division here that makes a great deal of money, or whether it's a private equity investor that builds a sizable company and sells it at a profit, either one of those will be just as good. But a few examples of victory are what are necessary.
Few examples of victories, what's necessary. Punita, you of course know more than a thing or two about how PE firms behave. What's the sense that you get in your conversations with large private equity firms now as well? Why is it that we haven't seen large private equity flows? Is it also because exits have been tough? What explains this?
No, actually, to the contrary. When I speak to private equity firms, I get the sense that they're actually looking to deploy more capital into India. In fact, prior to the election, they were, if the election result wasn't supportive, they would have looked to exit. But now they're actually looking to commit much more capital to India, and it's just taken a while because, the due diligence process takes some time to deploy capital, and the valuations are not particularly attractive. And so I think a lot of deals are sort of hanging in on negotiating the right price. But definitely I find that even more than the stock market investors, the long-term investors, especially private equity investors, infrastructure funds, etc., actually looking to commit much more capital to India. And it's not necessarily that they are waiting for exits. I think that as they are getting more money into their funds, they are definitely looking to put more money into India.
Seth Freeman, I'm going to bring this to you, and something that you pointed out earlier, which is the MAT controversy, the GAR overhang, the retrospective tax that still continues to somewhere loom in the background. The MAT controversy particularly, I'm sure the global investors who the finance minister met did point things out a tour there. Do you think the government failed in its communication on the MAT front, or did it really mess up as far as the entire controversy is concerned? Because if you actually, and just to be the devil's advocate, the finance minister believes he only executed a court order there.
Well, about this issue of communication, I think the communication problem is between the finance minister and the tax service. I think that's where there's a lack of coordination rather than communication with investors. The problem is that it really shouldn't be necessary to structure your entry into India through a third country such as Mauritius or Singapore. There are so many issues tied to that, and it does make it a lot more complex for foreign investors. And I think it's a turnoff, frankly, for investors that just don't want to get involved in that. I don't understand exactly why there aren't more amendments going on with the anti-double taxation treaties that India has with various countries. It's not that foreign investors object to paying tax. Investors don't want to pay tax twice in India and again in the US, for example. And one way to deal with that is it's about maybe 10 words in the existing treaty that would allow US investors to actually pay some tax in India and then get a credit here in the US, just the way we deal with Western Europe. I think that would really be great for India as a policy change.
Teresa, comment on that, since you manage a lot of money here in India as well, a lot of your investments are in the Indian markets. How much of a blow was that? Do you agree with Seth there and the fact that it was largely a case of, miscommunication between the finance minister and the tax officials? How much of a blow was this for the FII sentiment, according to you?
Obviously, there was a lot of internal politics in that thing. It's a very confusing story for foreigners. For Arun Jaitley to get up and say, I didn't have anything to do with it, it was the tax authorities, and then who do the tax authorities report to? Do they have some sort of quota of taxes they need to gather? But I think that the foreign investment community felt very sorry for Aberdeen and others who got that big tax bill. But it's the kind of thing that, of course, India was known for with the Vodafone issue. It would be very good to get clarity on all these issues. And it's very hard for outsiders to understand internal politics. So to the extent that can be avoided, that would be great.
You can understand the frustration in Teresa's comments there. But, Rahul, given the talk of this government that it will fix this whole issue of tax uncertainty and that it will move towards a more transparent tax regime, surely the controversy around the minimum alternate tax must have been a big blow for foreign investors?
That controversy came at a time, basically, when valuations were rich, and again, you didn't have economic data perform, and again, China was doing well. So that kind of aggravated the impact on markets. But clearly, it's good that government's taken care of that issue, and the sense is a pragmatic solution is going to be found with that. Because the last thing India needs at this point of time is any of these concerns which may impact foreign flows, because foreign flows are much required for the recovery of the economy.
Punita, I'm going to ask you to make a candid admission here. There was a lot of damage that was done to investor sentiment. That money hasn't really come back. Do you believe sentiment can return to the pre-MAT controversy levels?
Yes, as I said earlier, I think sentiment wasn't just a result of MAT. Yes, as Rahul said, you know, it came at a bad time because valuations were high and the markets were sort of poised for correction anyway, and any negative news would have hurt the markets, and this ended up being that bad news. But you know, I think going forward, if anyone wants to look at India long term, there is very few countries that offer better growth and very few countries that are in the right cycle. India's, you know, earnings are at a bottom, cyclical bottom. They're troughing out. They're going to improve from here on. And so when you look at that, and now with this correction, better valuations, the sentiment will turn when we see, you know, the next quarter or the quarter after that gives sort of better earnings numbers. Investment activity is showing some green shoots. You know, public spending is picking up in roads and railways, even in certain other sectors. It's certain visible signs. So I think as we see more of that, we will see sentiment improve. Of course, not to ignore the global factors. You know, we are all waiting for what happens with the Fed policy and when rates in the US will rise, what happens in Europe and Greece. So there are a lot of negative factors out there, looming out there, that will affect sentiment towards equities in general. But I think India is in the right cycle. Earnings will hopefully improve from here on, and all the things that the government is doing will eventually bring the sentiment back to positive territory.
All right, that's a fair point indeed. There's too much variable outside of India that will determine market sentiment here. But Parag Saxena, you've been with the finance minister, and I'm sure this issue has been flagged off as an area of concern by investors. There's been a huge uproar on the MAT controversy. How badly has this affected FII sentiment? I mean, what is the kind of feedback you've got while you've been with the finance minister? Have they underestimated, overestimated the damage? And what are FIIs really telling him at this stage?
I think anything that goes in the opposite direction, any newspaper headline that goes in the opposite direction of the plan is unfortunate. It is like the ball in soccer going in the wrong direction. You just don't want that to happen. As much as is possible, you want to be in possession. You want to be close to the goal of your opponent. And here where the government needs to be is to constantly help businesses with the problems that they have. There should be a prevention of problems department that sits up and says, how do we make more FDI happen? What is the challenge? What is it that people need? And how can we give them comfort? In fact, this is something that maybe the FIPB can do. And I wonder whether or not it would make sense for the Foreign Investment Promotion Board to actually have a target. Raise $100 billion of FDI next year. What will happen then? They will go around to the various ministries and say, what can you accommodate and what's the help that you need? So that then, if it's power that needs it, or railways that needs it, or the financial sector that needs it, people from that sector will have a vested interest in getting it done. The same thing might be achieved by getting the various states to cooperate with the federal government, the central government, and to get the two to work together to attract money. One of the observations made by a World Bank USIBC study is that if all the states came up to the level of Gujarat, then nationally our rank would move up from roughly 170 to roughly 70 in the ease of doing business. That seems like something that's very doable.
Ease of doing business is an issue which we could do a debate in itself. But Rashesh, you were also part of those meetings with the finance minister. What's the sense that you got? Do you think there's enough clarity on the tax policy at that meeting between FM and FIIs? What was the government's response really to foreign investors on the specific issue of MAT?
I think on this trip especially the minister has clarified. I think that the issues are two. One is, over the last 4-5 years, there was not a lot of clarity with the earlier government. So there's a lot of carryover from that is going on, because people just assume that everything is opaque and ambiguous and arbitrary for the tax policy in India, which is not the case, because in the last 1 year, this government has made a lot of effort to clarify, to give assurance to investors. But the fear is there because over the last 5 years, they've been burnt badly on various issues. So I think one is that carryover, which slowly is gradually going away. I think along with that, I think everywhere in the world there are, there are issues, there are nuances, because the tax law in every country is fairly complex. So every investor will have some issue or the other. But I think like retrospective amendment to the tax law, which was one of the crying and burning issue, has now started to go away, because the finance minister, has very categorically stated that this government does not like to do anything with retrospective effect.
All right, he's categorically stated there will be no retrospective taxation. But Seth Freeman, I'm going to bring this to you because you essentially pointed out this was a miscommunication between the highest decision makers in the finance ministry and the tax assessment guys. The question is, they have perhaps realized the damage it has done, and which is why a certain panel has been formed to look into this matter. Do you expect an amicable solution to come out of this?
I think at this point, I do expect a favorable outcome. I think there's greater sensitivity in terms of how important this is. It's really a broader issue of having some certainty as much as it is tax itself. So yes, I think we're going to see much better coordination going forward. The question is whether short-term tax and this issue of having a permanent establishment in India will pan out favorably. Many U.S. investors want to have their own team in India, and yet very sensitive about having an office and being declared a permanent establishment. So there are these sort of lingering issues. I don't want to belabor this because it does distract from all the long-term positives in India. And I agree with Punita about FDI and infrastructure. We see a lot of headlines about India, mainly referring to the stock market or maybe the bond market. We don't really see very many pictures and stories, at least here in the US, about the recent successes in infrastructure. And maybe photos and some more news about the successes would really open up more investors' eyes to India.
I don't want to go on and on about the MAT issue, but probably it's the one issue where the government has kind of got it wrong as far as the FII sentiment is concerned. So I'll let Teresa have the last word on this particular issue before we move on to some of the other issues that we want to address. Teresa, to play the devil's advocate, the government essentially just moved on a court order, and if it hadn't, it could have probably been pulled up by enforcement agencies. So in a sense, their hands were tied, is the explanation that we get from the finance ministry. How can the government now clean it up? How can they now resolve this matter to clean the slate?
Oh, well, I think they should be just very clear what the tax rules are, what they aren't, and have an assumption that every rule will be enforced. That's always the issue for us all over the emerging markets. The rules generally are okay, but who knows when and if they're going to be enforced. If it's just a sure thing that all rules are there because they're good rules, then they will be enforced. That's fine. That's great. That's certainty. But when you have rules the size of the New York City phone book, if there were still a phone book, then you've got to get rid of the ones that don't matter, get down to the ones that do, and enforce those that do.
All right, Punita, so let's really take it to the issue, the red flag or the elephant in the room, which is corporate earnings. We can go on and on about markets, we can go on and about valuations, but earnings are not picking up, and that is perhaps the biggest point of pain as far as India is concerned. When do you see the earnings pickup happen? And more importantly, can the government play a role at all? They are trying to push the public sector investments, they are trying to create more vehicles of investment, but what about the private sector? Can the government do anything at all? And when do you see that turnaround happen?
I think as the government spends more on public infrastructure, whether it's roads and railways and potentially agriculture, that will have a ripple effect into the private sector as well. So the private sector will see, for instance, take an example, if there's more road awards given and more road activity picking up, then the construction companies are going to see more activity, and as there's more construction, the private sector will benefit, at least in that space. Similarly, there are many sectors that are linked to rural economy, and if we have a good monsoon and interest rates have come down a little bit, so demand might also pick up. The earnings on for that, companies exposed to that space will also start picking up. And as interest rates have come down, we will see generally consumer demand pick up. They haven't come down enough, but they've come down. And so the companies that are linked to, whose corporate earnings are linked to consumption demand will also see corporate earnings pick up. So there's a base effect plus all of these 3 or 4 things that are happening that will result in improving corporate earnings, and we might see debt levels come down. We might also see interest rates bring down the cost of debt. And so I think all of that will factor into improved corporate earnings.
Rahul Chadha, just to pick up on the point that Punita was making on what is it that's going to improve corporate earnings, the fact of the matter is that balance sheet of a lot of the companies is still very stretched. Is that a key concern that you're watching out for right now before we see a revival in corporate earnings?
I think clearly it would be the stretched balance sheets of most of these infra or I would say metal companies in India. And how does the government or the central bank sorts that out? Because clearly that has impact on some of the private banks, that has impact on large amount of public sector banks, their ability to further lend to the economy. And again, we've kicked the can down the road for some time, but we hope that government sorts this out in next 6 to 9 months.
Let's talk about the investment cycle turning as well, because one would have assumed that the government created space for investment to happen, especially with the budget where it kind of gave itself slightly more fiscal room to push public investment and in turn improve private investment. Why has the investment cycle not turned? Seth Freeman, what's your view on that?
There were some comments earlier about, in terms from a foreign investor's perspective, about the time it takes to perform due diligence, to become familiar with the opportunities. One of the issues is that these are fairly long-term projects, and they require, in many cases, some form of project finance, which is a little bit different than just buying a company. So, and it's subject to the vagaries of the contracts being let out by the state or the federal government or the city, and these take time to sort out. But there's certainly a huge backlog of infrastructure, public infrastructure in India, and tremendous opportunities for investors with a long-term view, and who can stomach some intermediate setbacks through the process. One can't assume it's going to go smoothly, but the long-term rewards are generally good.
All right, so the long term looks good, but the short term is where the pain point really is. Teresa, I'm going to throw this to you because you looked a little frustrated here. As an FII, what are your top 3 concerns for India? We spoke about ease of doing business and then we shied away from it, but let's really address the elephant in the room. What are the top 3 concerns that you have for investing in India?
Well, my concerns for India, I think, are over a longer period and may not be directly related to the 10% fall. But I think we would like, my biggest concern for India is that it is a really terrible place to do business. And it ranks as one of the 4 or 5 worst places to set up a new company in the world, and also ranks as one of the worst places for a company to go through bankruptcy. I think those 2 poles are very important to get right. And we see a little bit of progress on that front, but in a high level, I think we really need to see that get better.
All right, Punita, I'm going to throw this to you because Teresa there seems to explain that this is a frustrating place to do business in. Do you agree with her at one level, having been an investor all your life?
Yes, I think it is. India is a tough place to do business because there are lots of rules and regulations, and there's not a lot of transparency and some amount of discretionary powers that these regulators have that create issues. So I think India definitely is a tough place to do business, and that ease of doing business is a focus of the government, and hopefully things will improve from where we are. We couldn't really, go down the ranks. I think we can only move up the ranks. So that's one. And I think I would add one other thing that worries me about India is, the skill, the level of skill in India. We have so much young population. The demographics of India are its strength and also its weakness, in that, you know, if we don't channel these young people in a productive way, India could have a lot of issues. So it's very, very important, and India doesn't quite have the level of skill that is required to make India a strong manufacturing center, and therefore a lot of energy and effort needs to be put into really educating and developing the skills of these people. And as that happens, we will ensure long-term sustainable demand in India, which will help companies and corporate sector, and that will really result in much more long-term investment opportunities for everybody.
Let's talk about some of the other reasons why the finance minister is in Washington. That's the theme of this discussion, isn't it? The India pitch. Parag Saxena, one of the reasons why the finance minister is wooing investors is because he wants a ratings upgrade. You know, ratings agencies haven't upgraded India. Moody's has upped its outlook, but an upgrade hasn't happened. And that, if it were to happen, will be a significant positive indeed. What is your view on that?
I think the Prime Minister and the Finance Minister are doing a great job on their road shows. The Prime Minister has had a wonderful set of road shows globally, which have raised the awareness of India, which have heightened his plan to improve business and improve India's standing in the business. The Finance Minister has echoed the same sentiments, and this is needed. But what it needs as a backup is secretaries who are given responsibility for making investment happen, secretaries who are given responsibility in the administration for removing the impediments that occur. Once those impediments are removed, because there is a target which is based on investment, again, based on investment in the bond market, based on investment in the debt market, you will start to see action happen. Make the administration or the bureaucracy a part of the solution. Ask them for their ideas. They're probably extremely well equipped to tell us what to do. They just need to understand the scale. India has the scale of the world's largest or second largest, most populous country. What that means is every problem that we need to think about needs to be thought about with that in mind. It can't be a few percent more than last year. It needs to be hundreds of percent more. Of course, you've got to start somewhere and you've got to start in the right direction. But it's got to be multiples of what's happening, not a few percent more of what's happening.
All right, so let us just put the macro picture to rest for a while and talk about the micros that really add up to that macro. And Seth, I'm going to begin talking to you about the valuations. You know, Fed rate hike is around the corner. There's been too much written and said about EMs. How does India really stack up as far as EM valuations are concerned? They were very, very high, very steep. And then, of course, this correction has happened. How do you see the situation as we talk today?
Well, you know, it's easier to analyze a listed company. And for those that you know, have declined or may continue to decline, those could create very strong buying opportunities. In terms of private equity investing, many of the founding families who control these companies do have fairly aggressive ideas about what their companies are worth, and aren't specifically that motivated for outside investors, unless the outside investor can really bring some other value to the company besides money. The issue about valuation will be improved from a dollar investor standpoint, because unfortunately, I do expect the rupee to decline further once the U.S. begins raising interest rates. And that will make certain companies, that will make investing in India less expensive for U.S. investors.
Punita, you understand more than a thing or two about valuations. How does the valuation picture look to you right now, especially when there is an India trade and there's a China trade as well right now, and a lot of our money, you know, flew back to China. We've recovered over the last 1 week largely because money flew back from China to India. So it's not just about the macro policies or, you know, the FII policy. It's also about how India stacks up to other emerging markets and, of course, China.
Well, you know, of course, the valuations in China are very, very high right now, and especially the A-share market. And the A-share market valuations are not that high. They're in line with what we see in India. So I think valuations in India after the correction are looking better. And the valuation disparity between the two markets is, you know, going away to a large extent. So, and India's long-term growth prospects, I think, look a little bit better than China. So for long-term investors, India offers better growth. China offers more momentum and liquidity at the moment, so you kind of just have to decide what your time horizon is. And I think you probably need to invest in both markets, not just one or the other.
You really need to compete with your neighbor at more levels than just one. But Mr. Saxena, if I may bring this to you, how does India really stack up when compared to the EMs? I mean, I want to get a view from you from a private equity point of view. When it comes to the valuation metric, how does the India really shape up? I mean, like Punita pointed out there's been some correction that has happened. Some amount of the pain has gone. Are valuations more attractive today?
So, on valuations, you have cheaper valuations in Russia, but you have a very risky market. You don't know when that's going to turn around. You have comparable valuations in Brazil, but you have the benefit of a country that is broadly natural resource rich. And importantly, there are many examples of large Brazilian companies doing well in Brazil as well as outside Brazil. And so that is what we need to have more examples of. So the issue in India is, it's really, can we have another 10, 20, 30, 50 examples at different sizes of success that will breed a lot of success?
Fair point. Let's again talk about the key focus of this discussion here before we wrap up this leg of our chat. The India pitch. One of the things that the finance minister said emphatically in Washington is that he's not happy with this 7.5% growth. He wants to take it to about the 10% level. And the key expectations, from the investor community is that this government will do that. Teresa, do you think India can achieve 8% plus growth when global growth is still unstable? Is that an unrealistic expectation at 7.5%? Because India today is already an outperformer, isn't it, at 7.5%?
Well, I have to say we are at best confused and at most cynical about the rebasing of the GDP figures for India. So we are not looking at it as a 7% growth on the GDP front because of the rebasing and the confusion around what the real numbers are. And for us, that really isn't quite the point. What we are looking for is earnings per share growth at the company level. We do think that India can provide opportunities for earnings per share growth at the company level for a number of reasons. One is, if you don't mind me being so frank, there are so many things that are difficult in India, so many things. That's low-hanging fruit. If the government just simplifies a few things, you can unleash huge amounts of corporate energy that you have in India. So whether or not the GDP is growing on a comparable 7%, comparable to China, comparable to Mexico, or it's a non-comparable 7%, it's kind of irrelevant for us. What's really relevant is that the companies can grow their earnings per share and can grow their revenues, which they can when they have great business models. They're providing products that people find aspirational and want to buy. They get a little more money. They might buy store-bought underwear. And all of that is a great story to us. I think the whole question of what the GDP is or isn't, for us, and we're not the IMF, understand, is a little bit of a red herring.
I appreciate you being candid there, but said I'm going to bring this to you. Teresa says at best she's confused, at most she's cynical about this rebasing of the GDP data. Are you as cynical about the new GDP series? There's been a lot of debate out there on whether this is really comparable to the global peers. What's your view on this?
Oh, was that to me?
That's right.
Yeah. I also don't pay too much attention to that because I actually don't believe on a global level that governments can really make these measurements so finely. And what usually happens is that the headline numbers get adjusted a month or 3 months later, and we really never hear about the net GDP or the net growth once the numbers are adjusted. The reality is, I agree with Teresa, you really have to look at a company by company level. And you have to be able to perform, due diligence at the company level to basically reduce the kinds of risks that are sort of India specific. On the other hand, this is where the opportunity is. And, we specialize in emerging markets, and I guess we're a little bit masochistic that way. But you have to actually enjoy the complexity, and you have to feel that you are, looking in a much longer lens. And that's where we're coming from. So the other problem, though, is you have to understand from the foreign investor's standpoint, the local owner or your joint venture partner, the local operator, can run rings around the foreign investor if they want to. And it's not exactly the best place to litigate. So you really have to take the time to develop relationships with management and really understand where they're coming from in terms of creating investor wealth as well as family wealth.
Fair enough. Punita, sitting in New Delhi, you have a better idea of how the economy is indeed growing. We keep hearing from the Finance Ministry that, India is an economy that's in the recovery mode. A 7.5% economy is not one that's supposed to be in recovery mode. Does it feel like as if we're growing at 7.5%? And can we get to that 10% mark as the Finance Minister wants us to?
Well, I think getting to 10% is not easy for any country, and when they do get to 10%, it comes with its own sets of problems. We've seen that in China. You can't sustain a 10% for very long. But I don't really look so much at the absolute number itself, because it's more important to see it on a relative basis versus its own history and versus what we see in other countries. And versus its history, we are definitely on a recovery path. Whether that number is 7%, 6.5%, 7.5%, I don't know. I mean, it's what the data tells us. You have to kind of go by that. But if you look at corporate earnings growth, it doesn't feel like we are growing at 7.5%. You're absolutely right that, if you are growing 7.5%, you shouldn't be talking about recovery, because that's a pretty, that's supposed to be a fairly strong number by itself. The real question is it sustainable, and will corporate earnings recover? And I think that's where we really need to see some improvement. India has, the GDP has got many components to it. You have services, you have agriculture, you have industry. So at any given time, one may be growing and the other one may not be. And what we as investors have obviously got more transparency into is the corporate sector, and there I think earnings recovery does not seem like we're growing at 7.5%. There are companies though, in certain sectors that still have grown very strongly. So it's not across the board that the economy is weak. It's only in certain sectors that the economy is quite weak, and their contribution to GDP is not significant. So as their contribution to GDP increases, we will see a better GDP. Now, whether it's sustainable or not, I don't know.
Okay, closing comments then from our first panel on the FII view. Let's throw it to Parag Saxena joining in from the Times Square in New York. What are the three things, Parag, that you think this government needs to do to attract foreign investment? What was your pitch to the Finance Minister yesterday?
I think what the government needs to do is to actually implement some of the stuff, make some of the things so easy that there can't be internal challenges. So if you take taxation, the government seems to have every right policy point of view. Why is implementation not happening? One of the other things I tossed at the Finance Minister yesterday, and I categorized it as a radical idea, was remove capital gains tax completely. And he countered with the obvious question, which is, how do I fill that hole in my budget? Where do I get that money? It's not a lot, but how do I get that money? And I said to him that you will get it from the increased taxes that the companies pay. So if you have a successful investment, somebody puts money into the country, they make an investment, the taxes that are paid by those companies and its employees, because the employees go up, will, I believe, offset capital gains taxes and will significantly simplify the pathway for people to invest. Again, there's nothing that should be done differently for foreign versus domestic. It's just simplification, because what it will remove is queries or issues by tax department which take up time to settle. By removing impediments like that, you'll have a huge gain. I use the example of our own firm. between when we started investing to now, we've gone from 40,000 jobs to 80,000 jobs in the companies that we have invested. We're just one small player. If a bunch of other companies does the same thing, you can see a massive multiplier effect of that and encouraging that. So I think the big message for the government is implementation. We have excellent rules. How do we accelerate and make everything happen? Other well-known problems are the judicial logjam, where there are lots of well-meaning courts that mostly come up with the right answers, with laws that are sensibly put together. The point is that the process takes too long, and justice delayed is justice denied. We want to get away from that, and I think implementation here of rapid courts in some cases will help. So India in general has excellent laws, has excellent policy. It's all in the implementation.
Parag, it looks like the Finance Minister did indeed pay a lot of heed to what you had to say, because he spoke about judicial intervention and how that sometimes comes in the way of decision making. But Rashesh, very quickly, has the government done justice to its political capital? I know the days of instant noodles are perhaps over, but instant gratification is what every FII wants. Or are they being a little impatient here?
I think they have done it. I think the idea is to really pace it out, because this is not a sprint, this is not a quick fix kind of an approach, because a democracy like India, the political system like India, where there are a lot of counterbalancing forces required, you can't do what is called big bang or quick fix, or so investors should not expect instant gratification. And truly, India is a great game for investors who want to be there for the long term. And I think in the last 1 year, if you look at the insurance FDI bill, the opening up of the defense sector for investors, this, as I said, categorically stating that government will provide stability for the tax law, the commitment to GST. So we are seeing a lot of things that the government is doing. The auctions in terms of spectrum and the coal auction that happened, this government has done quite a bit. It's been bit by bit, and I think what investors need to do is connect the dots and see the whole picture as a whole.
So Teresa, tell us, you're the one who's going to connect the dots, look at the whole picture and put money on the table. Help us understand what is the opportunity for India from FIIs. What's your current exposure in the Indian market, and how much do you think it can potentially go up over the next few years?
Let's say we're 2.5 billion AUM, and we're open to having about 30% of our portfolio in India. We don't have that quite yet. So our number right now, I don't have the numbers in front of me, but closer to 500 or 600 million in India.
All right, Seth, I'm going to let you have the last word. Irrational euphoria has certainly paved the way for cautious optimism. Are you someone who's still bullish on India? Buy India? Is that your call?
Absolutely. And frankly, 10% one direction or another is not a big amount of volatility in a market like India. And I think that's one of the key issues, is that investors have to be able to stomach that. And most of us are actually investing other people's money. And those institutions and wealthy individuals and so forth, they have to be trained to expect some volatility. But it has to be a long-term play, in my view, because there are a lot of pieces that have to come together. I may have mentioned this before. I am very concerned, though, about financial inclusion. And the kinds of things we're talking about only affects a very small strata in India. And it's going to be very important to not have growth so stratified, and to distribute some of the wealth creation to the hundreds of millions of very poor people in India.
All right, financial inclusion is something that the government is trying to move the needle on. We hopefully will see a lot of that happen. But thanks each one of you, Punita, Seth, Parag, Teresa, Rahul, and of course Rashesh Shah, for joining us live from each of the locations that you've joined us on. Thanks very much for being with us on this leg of the India Pitch.
But don't go anywhere, because coming up in just a few minutes from now is the CEO view, and we've got 5 very special CEOs joining us to put in perspective what is corporate India and corporate America expecting from the government. Mukesh Aghi, President of the US IBC, Rajan Mittal of Bharti Enterprises, Nainalal Kidwai, Kiran Mazumdar Shaw, and Vindi Banga join us on the CEO view in just a few minutes from now, right here on the India Pitch. Keep it with ET Now.